Kia ora, and welcome to the New Zealand Property Market Podcast, brought to you by Cotality for the 20th of July 2026. I'm Head of Research Nick Goodall, and today I'm joined as per usual by Chief Economist Kelvin Davidson. Kelvin, we've got what turned out to be a pretty tense World Cup final in the end to chat about later on, and congratulations to Spain and their followers. But first, let's get into some work stuff. We did release the Cordell Construction Cost Index for Q2 last week. We sort of hinted over the last few weeks anyway, so there's probably not too much to chat about, but we did see costs accelerate from the previous quarter while also not skyrocketing. Do you want to take us through some of the detail from that and how the release went?
Yeah, just I suppose a bit of context to start with. So the overall picture is, there's been a bit of acceleration in construction costs, but not massive, and probably not as much as you would have expected given the Iran situation. That these figures relate to Q2, so of course that was a period pretty much all affected by the US-Iran situation. Okay, we had the peace deal in there, which might have taken a wee bit of heat out of things for a while, but of course that's broken down again. So given all of that backdrop, probably the numbers aren't as strong as you'd expect. So we had a 3.5% rise in overall construction costs in the second quarter compared back to the same period last year. Up a little bit from 3% in Q1, so a little bit of an acceleration there. I think if you go back sort of 12 months or so, that number got as low as 2.5. So it has accelerated a wee bit, but it's definitely not perhaps as high as you'd think given all of that global uncertainty that's going on. The average through time, these figures go back to 2012. The average is about 4%. So it's still even a little bit below average. And certainly below the spike we had after COVID there when we had the old famous plasterboard shortages. The annual growth rate got up, I think it was about 10.5%. So yeah, we have seen an acceleration, but it's still relatively controlled. You wouldn't say that costs are skyrocketing. This measures the end price, the output cost, what a person taking on a new build project might be looking at. So that's sort of important context. Now, I think what's going on here is that, yes, we know there's been fuel surcharges and we know that there's some materials have gone up. The Cordell team's picking up things like steel, for example, is something that's gone up quite a lot. There's a key product that's increased. So we know that input costs are going up. The fact that end result isn't really changing too much pretty clearly shows that builders are wearing this. They're taking the hit on margins, having to reduce their profits that they're getting from these projects, and that's what we've been hearing on the ground. It's what we're seeing in the data, and I guess just fits with the fact that if you think about the housing market in general, house prices at the moment are really flat, and there's a lot of existing stock on the market. So, in that environment, it is going to be pretty difficult for builders to pass these costs on because, the householder might just go, well, you know what? No, I won't take the new build. I'll just take that existing house that's already there at a flat price, and sort of substitute away to that competing product. So yeah, difficult environment for house builders to push these costs through, and for the moment they're definitely taking that hit on margin. Can't last forever, of course. So I guess it remains to be seen how long they can keep doing that before we run into, unfortunately, potentially, insolvencies, that sort of thing, or that does get passed through to the end user, and then maybe they pull back from new builds altogether. So then you see consents tail off and building activity tail off. So there is, it's unfortunate timing, of course, because, construction sector was just starting to look a little bit better, and then all of this comes along and makes things look a little bit worse. So yeah, lots of things going on around construction. At the moment, that end price for users isn't really changing too much because builders seem to be taking that hit. But we will have to watch over the next couple of quarters about how long that can last, I guess.
Yeah, for sure. I think that's one of the main things, right? It's disruption. For the disruption it didn't need, we did see some growth in consents come through. Don't expect that to continue on too much, I don't think, because of this disruption. And let alone, the broader lack of confidence in the economy, which is going to see less people committing to new builds too. So obviously not great. Could be worse in terms of a cost thing, but yeah, definitely provides more disruption than we otherwise would have liked when we saw some momentum coming back to that building sector, which we know we need to see. We need to keep building properties. And healthy building sectors, better for the economy, better for the environment, and better for the broader property market too. If we keep building those properties to So keep a lid on price growth overall too. So yeah, hopefully the disruption is, we'll continue to hope this isn't as long as it could be, and we do, see things improve. But yeah, as I said multiple times over the last few weeks, that piece deal does look a little bit more shaky, and so we just continue to wait and see what happens over there with the situation in Iran and the Strait of Hormuz. But sticking to the kind of price cost inflation theme, Kelvin, for today, which is pretty much what we're going to focus on. We also last week got selected price indexes data, and kind of nice timing, I suppose, in advance of getting the official Q2 CPI inflation data, which comes out tomorrow. Do you want to run through that data as well? I know there's quite a bit of detail here. It doesn't cover everything, but of course it's a decent chunk, so it gives us a fairly good idea where things will land. And I suppose, as always, like you just did with the context of the construction costs, the construction of where CPI might be, the economists' read on it, and what it might mean for the Reserve Bank and their read on this, over the coming weeks as well.
Yeah, so selected price indices, this a monthly measure, relates to June. They were on the latest figures, about 45% of the benchmark quarterly CPI. And it does tend to relate more to, I guess, your volatile things, your so-called tradable elements. Obviously, fuel is part of that. Food is something that gets a lot of attention within this SPI, as well as things like airfares. Rents are in there as well. Rents are non-tradable, but rents are still part of this release as well. So, yeah, I mean, in general, the June figures perhaps were a little bit softer than what we saw in May. I mean, the fuel prices came down a little bit. It looked like there was a little bit less food price inflation, still going up, but at a slower rate than in May. Airfares down a bit. So I'm just trying to think through some of the other categories in there. Generally, the June figures had a slightly softer sort of feel than the May numbers. But there's still inflation pressure there. And of course, the quarterly CPI takes into account, well, April, May, and June, not just June. And we know that April and May were testier months for inflation. So yeah, June numbers, maybe a little bit of comfort in there. But when you take a step back and include April and May, look at not just that 45% of prices that are included in that monthly release, but also everything else too. Probably the picture for inflation is still quite concerning, and we know that July and August potentially are going to look worse too. So yeah, a little bit better in June, but it's definitely not time to relax. There's still inflation in the system, and in fact, to the point where a lot of the bank economists must have been waiting for this monthly index before they kind of firmed up their overall quarterly CPI number, and off the back of that, sort of Friday lunchtime, Friday afternoon, a lot of the notes started coming in, and actually, if anything, upgrades to what Q2 CPI might come in at. So the Reserve Bank is expecting 3.9%. If anything, the bank economists have gone a little bit above that. So either way, it's going to be an unfortunate number that we get for the CPI tomorrow, being Tuesday for Q2. So yeah, 3.9, 4, 4.1. It's going to be still way above that 1 to 3% target. So yeah, that's kind of the overall gist of that. I mean, what it means for monetary policy, will come down to the Reserve Bank judgment, I guess. I mean, as I say, they're expecting 3.9. So I guess if we get 3.9 or even slightly above, like it's probably within the error margins. If we got 4%, it's still roughly in line with what they're anticipating. And they've been sort of talking, I suppose, about that whole path back to neutrality for the official cash rate. It looks like there are further increases to come. So if we get a 3.9% CPI, if we get a 4% CPI, somewhere around that, it probably keeps you on that path for another official cash rate increase in September. I think it would take quite a big undershoot to really change that path. Maybe get a CPI at 3.5 or something like that to sort of really start raising question marks about that OCR path. But I think if we get around 3.9, somewhere around there, even if it's slightly above or even slightly below, actually, I think we're probably still looking at that September rate rise. So yeah, that's kind of the overall inflation numbers. At least the housing market is not part of the inflation problem at the moment. And we've talked about construction costs creeping up a little bit, but still relatively controlled. Housing market, existing house prices are really flat, and also rents are kind of flat. Now, there is some hints in the data that at least the rental downturn is coming to an end. We're not seeing rents fall as much as they were, They're not certainly not rising to any great extent yet either, but maybe you can say the downturn's over, and it would fit with things like rental affordability having improved. It looks like the stock of rental listings has started to be eroded just a little bit too. So, and net migration's picking up as well. I think that's on our run sheet too. I mean, net migration's still pretty soft, but it has started to turn around. So I think you can probably start to find those reasons for why rents might have stopped falling. Have they started strongly rising again? No, but that downturn could be over. So yeah, lots to watch on the price front actually. I think overall, yeah, looking out for that CPI tomorrow, somewhere around 4%, and speculation about that next OCR increase in September.
Yeah, and I think the other thing on top of that is that, Q2 may not be the peak for inflation anymore. I think it typically was the expectation, but now, again, it's going to depend on these second round impacts and, what we sort of get in wage inflation flowing through the system as well. But whether we do see, if it is 3.9 like the Reserve Bank expects, and it's probably worth noting they did update that recently at the Monetary Policy Review. Often we don't hear what their forecast is, in between those monetary policy statements where they update all their forecasts. This time we did get that update because previously they were expecting 4.2%. So, because other economists update their forecast more often, they are often closer to the actual number. Reserve Bank here have actually changed their expectation and been able to publish that at the Monetary Policy Review a few weeks ago. So that is a more recent view of it. And so I think, you can expect it to be closer to that, 3.94%. But I think the other side of it is, this may not be the peak. We may still see it inch up through Q3. Now that, again, is a lot of uncertainty there. It will depend on the length of disruption in the Strait of Hormuz and again, the flow on through to everything else. So, just want to sort of point that one out too, is that even if it is lower than we previously thought, and that's all got rated down after the most recent sort of releases of data, it still might not be the end of it anyway. Now, it's not to say necessarily you have to lift the OCR to fight that. Of course, we know the OCR is looking at that medium term, and if it is still seen as a short-term spike, which if you look at most of those forecasted charts, you do see the lift and fall back down again. So as long as that is still going to be the case, then again, you can probably have the faith that you can slowly get back to that neutral OCR, but you don't have to rush it in. You don't have to fight it right now because, the likelihood of this flowing through to medium-term inflation is maybe not quite as strong as it was a few months ago. And again, I think that all depends on your read on the strength of the economy, which, I've been pretty clear at saying I don't think many of the forecasts of where the economy is at right now and also where it's going in the future, I don't think it's probably going to be quite as strong as many expect. And if that's the case, then inflation will likely be lower off the back of that too. So, that's where I think the debate continues to come from, and is why we pay so much, I think even more attention these days at all the weekly data and little bits of data we can get, because there are so many different ways to read this at the moment, and it really is about where the economy's at, what inflation is flowing through, and that'll determine what happens next. So that's why there's so much focus there. I do want to quickly wrap the other economic releases that we saw in the last week too, Kelvin. You touched on net migration there. I think it's an interesting one to talk about just briefly, mainly because of those large revisions, because there's obviously a couple of ways to read that data. We also got that services activity index, or data for June as well, which you could probably take a little bit of a positive spin on from an economic perspective, but then also some caution from consumers on the electronic card spending data. So do you want to give a speed wrap of those other indicators, all again, I suppose, tailored to, what is the read on the economy likely to be off the back of all this information?
Yeah, I think, I mean, we've talked about inflation. There's definitely still concerns there, and just the real heart of this is that trade-off, which we're still coming back to around inflation being problematic, but the real economy looking pretty soft. And how does the Reserve Bank sort of operate in that environment, and facing those conflicting forces? And so, I think on the whole, the latest economic figures probably go along with your view of, well, are things really as strong as what people might think? And actually, the latest numbers still look pretty sluggish. So there is that conflict there between inflation and the economy. And so, electronic card spending from Stats New Zealand, that was for June, actually down pretty sharply. It's been very volatile lately. I think it was down sharply in April, back up in May, down again in June. So fell back 1.4% in June. Pretty soft on that electronic card spending figures. That's, I guess, picking up on the sort of household sector, the consumer economy. Households still feeling fairly cautious. The services indicator, performance of services index from BNZ and Business NZ, was just above 50. On that index, 50 is a rise/fall. That's the cutoff. So it was slightly above 50, indicated a slight increase in June, but I mean, it was only just, and it's been below 50 for a series of months. So the actual level of activity is still relatively low. So I think, yeah, probably those two indicators, you'd still have a degree of caution about where the economy really sits. And then net migration, lots of moving parts in these numbers. Obviously, it's people coming in, people leaving, new citizens arriving, Kiwis leaving, lots of moving parts. But generally, what we've seen over the past year or so is that new arrivals to New Zealand have slowly increased, and departures of current residents have slowly fallen. So the net effect of that is to bring up the overall balance ever so slightly, and it's been pretty slow moving. But that's the kind of two things moving in a favourable direction. So in the year to May, we had about 18,800 net migrants to the country, which is the highest since January 25. So whatever that is, 16-month high. So that's sort of positive at face value, but the average depends on which period you pick for your average. But I'll just go back as far as I've got in the spreadsheet. The average is about 30,000. So even though it has improved a little bit, it's still below average. And we're getting pretty significant revisions on these numbers too. That's something that's been picked up. So the numbers I just said relate to May. So in the year to May, we had 18,800 in terms of net migration. If you go back a month, what Stats New Zealand originally said for the year to April was about 23,000. Then a month later, you get the revised numbers. They had revised down that April balance from about 23,000 to less than 18,000. So chunky revision, that's 5,000 people suddenly just gone from the estimates of our population, and a 23% downward revision from where they originally thought. Now the revisions aren't always that big. I'm not quite sure what's going on just at the moment, but we are in a period where these numbers are released originally, a month later it gets revised, even 2 months, 3 months later it can get revised, and at the moment those revisions are pretty significantly downwards, and so just sort of puts you in two minds. I mean, yes, we're seeing migration rise a little bit, but it's still quite low. And if anything, it's getting downwardly revised each month. So, yes, sluggish net migration, sluggish card spending, services sector, PSI, as they call it, not looking so strong either. So inflation numbers, problematic. Real economic indicators, not looking so strong. So still not easy for the Reserve Bank by any means.
Exactly. Yeah, that's the thing, right? It's definitely throwing up some conflicting information and conflicting results of what they might do with the OCR and the impact it might have. The migration stuff's interesting, right? Like, we typically want to comment on the trend. The trend is upward, but it's hard not to, look at that revision and go, well, just a month ago we thought there were 23,000 more people. That's a significant amount of demand for goods, services and housing. Now that's down at 17 something, and it's gone up to 18 this month, last month. But that's a pretty decent change there too. So again, the main point really is to just urge caution on reading too much into these figures. We need a few months for them to settle down before we can truly talk about trend with that, and that should be the case with everything, I guess. Not just these net migration data because of revisions, but also because we want to make sure we've seen a few months of change before we really say the trend is moving a different direction, and we're seeing growth come back, and what it is, card spending or the business performance or whatever it might be. So it's a good little lesson for that anyway, based on needing lots of data for trend, and also watching raw numbers if there are series that have to be revised up or down over time as well. So I think it's a good reminder of all those things anyway. Some good practice when analysing data. All good, mate. Well, that's pretty much it for wrapping up the last week of data. The monthly video is now live, so I guess for anyone watching on YouTube right now, because we've now got this series fully available on YouTube, you'll probably see that pop up on your feed on Friday afternoon, so you'll know it's there. But for others, that's where you can go and check it, the Cotality NZ YouTube channel. This week, Kelvin, the chart pack report will be out. Do you want to, give us a sneak peek of anything that's in there? What's the chart of the month going to be this week?
Looking at investors, so we may have talked about it a couple of weeks ago on the pod. I can't quite recall, but we've just seen investors tailing off a little bit, and so just taking a look at bioclassification in that chart of the month, and I guess just bring a bit more sort of the commentary that we're having around investors, what they might be thinking, pros and cons, challenges and headwinds, these sorts of things. So, but yeah, long story short, we have seen those investors just tail off a little bit in terms of purchasing activity, and I wonder if the election is coming onto their minds around possible tax changes. So yeah, that's the chart of the month, along with a bunch of other stuff from that chart pack as per usual.
Sure, keep an eye out for that. We'll chat in more detail about it next week. Whether we talk about, not bioclassification, or we'll look at some sales volumes or something next week. So we'll chat about that next Monday anyway. But that's all good, mate. That's all for property market and economic chat this week, Kelvin. So we can delve into a little bit of personal stuff. But for anyone that is not as keen on that, you're welcome to move on now, and we will talk to you again next week. Kelvin, of course, fresh of mind for me today was the World Cup final being this morning. As I said earlier, congrats to Spain. Probably a well-deserved win, I think you'd have to say. Certainly dominated that final and looked pretty impressive throughout the tournament, not least in that semi-final taking out France as well. So yeah, they'll be very happy to get it done, even though it took extra time prior to getting any penalties, into the stage of penalties anyway. And hard not to feel a little bit sorry for Messi, who once again kind of lit up the tournament when he was required, and just seems like, I don't know, just the nature of the guy. He's so chill and just does what he does, right? Doesn't get too wound up about things, and he's pretty amazing. Not sure you could say the same for some of the Argentinian teammates who are pretty feisty at times. Maybe it's a bit of South American flair coming through, and in a big game like that, maybe you can expect it. But yeah, certainly a physical game. There's no doubt about that one. But well-deserved winners to the Spanish and their second ever World Cup title as well. So they'll get to defend it in 4 years' time when they host it alongside a number of other countries, actually. But I'm telling you what, right now, mate, I'm already looking into how we can afford to take the family over there, and kids will be a bit older and a bit easier to travel, and we can go and enjoy a World Cup in Europe and Morocco as well, actually. And I know there's some games in South America to kick off, given it's 100 years since the first ever World Cup, so it could be a pretty special one. So anyway, that's certainly where my head's at, mate. Did you catch any of that? Or obviously All Blacks Saturday night, pretty impressive against the Irish.
Yeah, geez, there's been a lot of sport to follow. Yeah, I've only seen snippets of the World Cup final this morning, bits and pieces on stuff, and photos here and there, and a bit of comments that the readers were sending in. So, but yes, it feels like Spain, to a non-football expert, feels like Spain have been a pretty strong team throughout. So, maybe you say best team won, but yeah, gee, lots to follow. I mean, I enjoyed the All Blacks game on Saturday night for sure. I was following cricket this morning. The Black Caps have snuck over the line, very tight margin, but got there in the end. Canberra Raiders had a good victory on Saturday, so I enjoyed that. And for me, I mean, I'm not a great golf watcher on TV. I enjoy playing golf. I don't watch a lot on TV, but yeah, man, Ryan Fox winning the Open, that's huge. There's not been many major winners from New Zealand, and so he's sort of come from nowhere after the first couple of rounds. He was sort of middle of the pack and just stormed through and took it. I mean, talk about pressure on the last hole. Having to sink a 3 or 4 meter putt to win it outright without having to go to a playoff. I mean, that's pressure. So yeah, he'll be enjoying a few drinks now, no doubt. So yeah, great, heaps of sport to follow, and of course. Big thing for me is kids are back at school, so that almost trumps everything. I've got a quiet house, and sun's shining, so yeah, life's good.
Big sigh of relief for you on a Monday morning then. But yeah, couldn't avoid that Ryan Fox news. Yeah, I was the same. Had a mate text me this morning, and he actually got up to watch the end of it. So he was firmly committed. And yeah, I think that's only our fourth major winner, behind Bob Charles, Michael Campbell, Ryan Fox, of course, and Lydia Ko. So a pretty impressive list to join. I know he got a PGA Tour win, a year or two ago, I suppose. And so he had that form a while ago, but he seemed to, sort of go into a bit of a slump. I'm not sure how bad it's been. And yeah, I'm certainly not a big golf follower, but hard not to be proud of a Kiwi like that on a stage like that. And I don't know what the prize money would be, but it would be pretty massive, I suspect, and no doubt get some entry into, I don't know, probably every major tour he wants to enter from now until he's over it. So yeah, pretty impressive win. I haven't seen any of the footage, so I'll have to go and check that part out. But yeah, look, like I say, sport-filled weekend, very impressive. Kids sport was back on over the weekend too, so back into that. But likewise, happy to see them get back to school this morning, even if it was a little late. after they also stayed at home to watch the World Cup final. So yeah, good on the school for allowing that to happen too. So that's awesome, mate. But yeah, that's pretty much us for today. Anything else on your mind before I close us out?
No, that's it. Yeah, just we've probably got a wee bit of a sporting hiatus for the next couple of weeks, don't we? There's a feels like a wee bit of a quiet patch, but yeah, it'll all roar back into life before too soon, no doubt.
Yep, I'm certainly going to feel lost in the mornings with no World Cup. It's been hard when there's been those days in between games, and now to know there's no more is going to be hard. I'm sure the Premier League's not too far away, so it won't be too much of a gap. And yeah, the big thing, of course, on our minds is the South African tour that the All Blacks are going on. So yeah, I think we're 2 or 3 weeks away from that, and some of those smaller midweek-ish games before the big test series kicks in. So yeah, hopefully the signs from Saturday night, where it sounds like obviously the All Blacks were pretty dominant. I only saw the highlights, unfortunately, had a thing on Saturday night, but a good sort of last big match for them, probably leading into the South African tour, which is going to be incredible games, and they're certainly going to be tested. So yeah, looking forward to that one, and very well may be the waking up at 2 or 3 in the morning like I used to do as a kid to watch those big games. So looking forward to that one.
Yep, sure. We'll see about that on my front. I might just watch it delayed at a more reasonable time, but we'll see. It's pretty. I remember that as a kid as well. Pretty exciting, getting up at 2 or 3 in the morning watching South Africa. So, yeah, maybe I'll do the same.
Easy when you're a kid, not so easy when you're old and you need your sleep. So yeah, I hear you.
Yeah, we'll see.
No,
we'll see.
All good, mate. Well, thank you very much anyway. As per usual, Kelvin, always appreciate those Monday morning catch-ups and great insights there from plenty of data that was out last week, and looking forward to that inflation data tomorrow. But I just want to say thanks very much for listening. Please do get in touch with any questions or feedback as well. Good to see some of the comments popping off on those channels. But that'll do us for today. My name is Nick. He's Kelvin. You've been listening to the New Zealand Property Market Podcast. Mā te wā.